So I think he just highlighted accounts and types of investments that are easily accessible to people, and some that we offer on the Franc platform that makes it useful for the users listening and watching.
Completely. And he specifically mentions the best types of investments where you have control over your own money, right? So something like retirement annuity, great product, but there are very many restrictions, very many T's and C's when you sign up to it, which obviously restricts your control over it. Whereas something like the ETFs, which is also a long-term investment, you have a little bit more control around that.
Example, like again with the property market, if you're applying for a bond, that takes a couple of months to just get approved in the first place. So just
Completely.
Easier to open up a Franc account and start investing now.
Welcome everyone to another episode of Frankly Speaking, where we speak frankly about managing your money and investing. My name is Cassidy. I'm the head of growth at Franc, and next to me I have...
Hi everyone, I'm Keval. I'm an operations associate here at Franc.
I like your outfit, Keval.
Thank you. I like yours.
Thank you. We didn't plan this at all.
Honestly, we did not plan this.
We arrived at the office and noticed that we were both wearing a Franc t-shirt. Speaking about Franc, do you want to tell us a little bit about the company?
So for those of you who are new and don't know much about Franc, Franc is a goal-based investment app. Super simple to use, very easy, very low minimums, no minimums on deposits, so makes investing very easy and affordable for everyone and everyone.
Awesome. And we talk about investing and managing money on every episode of Frankly Speaking, which comes out every second week. So if you like what you hear or what you see, if you're on YouTube, please hit subscribe. And if you like this video, please like and comment. We really want to hear what you thought of it, what questions you might have about what we talk about. Which brings us to the topic of this conversation. We're going to be talking about types of investments. And this was actually a top blog post for September. It was written by a team member at Franc, Nick Oldit, and he unpacks the best types of investments for beginners or really any investors who want to get into investing or improve their investment game.
Just a brief background for those of you who don't know who Nick is. Nick has been involved in financial markets and investment management for the past 30 years and is an investment consultant here at Franc.
Awesome. So now, Keval, before we go into the best types of investments, I think it might be worth us chatting about what investment actually is. So I'm going to challenge you. Can you explain to the audience what investment is in one sentence?
Sure. Well, investment is really purchasing an asset in the aim of generating revenue or selling it at a future date for profit. A good example of this is buying shares. You buy shares, say, for 1,000 Rand. 2 years down the line, you sell it for 2,000 Rand and you've made a profit of 1,000. And that is investing.
And that was not one sentence, but it definitely did explain what investment is. So thank you, Keval. I think just to unpack that further, there's also obviously a difference between saving and investing. I think a lot of people get quite confused around it because the common goal between saving and investing is obviously putting money away regularly for a future goal or future cause. So whether that's putting down a house deposit or
Well, I'd say like saving could be just stashing money underneath your bed in a shoebox, for example. But if you contribute 100 Rand every week, at the end of the week, you're only going to have 700 Rand. But if you continue to do that with investing, you're going to have much more than that. And it's secure, like no one's going to come in and steal your money. So,
which is really important. And of course, the importance of your money growing as opposed to, just what you put into it is if you invest your money, it's hopefully going to beat inflation. Because obviously, as things get more expensive, your money, the value of your money gets less and less. So you want to grow it to at least catch up with inflation, if not overtake inflation, so you have more in the future.
Exactly. And you never know when those emergencies might pop up and you need that money. So investing is very important.
100%. Cool. So let's get into it. So the first type of investment that Nick listed on his best types of investment was a tax-free savings account. Keval, do you want to explain that to us?
Sure. So tax-free savings is not really an investment itself. It's more of a type of an account. Mm-hmm. This was introduced, I think, in 2015. And like most things in this country and lots of countries in the world, everything is taxed. But a tax-free savings account is not taxed. So you won't incur the taxes on the interest or capital gains on the profit that you make.
And why is that important? Do you want to maybe explain a little bit about the tax you pay on interest and capital gains?
Sure. So for capital gains, excluding your allowance of 40,000 Rand, so any capital gains above this, you incur tax of 40% of how much you earn.
Wow.
So that's a lot. And same with interest. Anything above 28,300, you taxed at your marginal rate, which is around 18%. So, yeah.
Okay, so you want to save on those.
Exactly. So saving with a tax-free savings account is very, very helpful.
And I know that you have a lifetime contribution limit and then an annual contribution limit, right?
Yes. So for yearly, the limit is 36,000. So you cannot contribute, you can contribute more than 36,000, but you incur a penalty of 40%, which is quite a lot. And your lifetime limit is 500,000. So just one thing to mention, say if you contribute 10,000 Rand to your tax-free savings account, and then a month later you withdraw 10,000, your limit doesn't change. So you still contribute to 10,000. So you still only will have 26,000 left for your annual limit.
Cool. So then, the rule of thumb, and I know we talk about this a lot, is to rather think of a tax-free savings account as a long-term investment, right?
Yes.
Because of that lifetime and annual contribution limit, you want to put the money away and then you want it to stay there and earn a lot of interest or a lot of capital gains, depending on which investment you have in that tax-free savings account that you don't pay tax on.
Exactly. That's the point.
Cool. Okay, then the next type of investment that we're going to chat about is the money market fund. So a money market fund is a type of unit trust, and we'll get into a little bit more detail about that in a moment as one of the other types. But this unit trust is specifically about giving everyday investors access to the money market, which is where money market fund managers kind of trade cash equivalent securities, and then debt-based securities. And you are essentially tapping into that and then earning interest off that. It's also the cash fund that you invest in on the Franc app, right, Keval?
Well, that's great. Having the money market on the Franc app, it makes it very accessible because, like I said, if you had to get access to this type of fund elsewhere, the barriers to entry is very, very high. But like I mentioned earlier, there's no minimum deposits in Franc. So literally you can have no excuse for not having one.
Yep, totally. With a money market fund, you earn interest. And on the Franc app, for example, you earn that interest monthly on the first week of every month. And it reflects in your account, or it updates your balance, and you'll get a notification about that. So that's how you earn on a money market fund. It's pretty cool. What's our next type of investment, Keval?
So another type of investment mentioned is a fixed deposit. So fixed deposit is a type of savings account. But very important thing to note about a fixed deposit is that it just tries to beat inflation, and you're locked in for a fixed period, hence a fixed deposit. And this can range from 30 days to anything to a year, 3 years. And obviously, the longer the period, generally, the higher return you get.
And what if you have an emergency and you really need that money?
So nowadays, often banks offer you 1 or 2 emergency withdrawals, like a get out of jail free card, but some of them don't. And that's the only issue with the fixed deposit, is that if you need your money and it's within that fixed period, the penalties for that withdrawal will be extremely high.
Got it. I think something also to mention is with a money market fund, the liquidity, i.e. your access to that money, is really good. So
yes, it is.
If you have an emergency, you can access it at any given time, whereas a fixed deposit, as you mentioned, you maybe get 2 get out of jail free cards, but then you have to pay, or you lose out on your
Exactly.
interest.
Especially on the Franc app, if you have the money market, we have a feature called a quick withdrawal, and you can have access to your funds in 2 to 3 days if you just use the quick withdrawal feature.
That's awesome. Cool. Then the next type of investment is a unit trust. So this is in a collective investment where investors' money is pooled to give them access to professionally managed funds at lower minimums and competitive fees. The money market fund, which we mentioned, is a type of unit trust. So that's one example. Another example, which we really love here at Franc, is an index fund or a tracker fund. It's also known as a passive fund. It's one fund with 3 names. And an example of that is the JSE Top 40. So it tracks essentially the performance of the top 40 companies on the Johannesburg Stock Exchange, right? Why is a unit trust so great?
Well, it's great because it just gives you so many options, and the return on it is also quite good. It's for longer term investment, so yeah, it's a really good option.
Which is a great thing to note, because even though the returns are already great, obviously slightly higher risk.
Exactly.
Which means you should put it away for a little bit longer. So 3 years is probably the minimum, but 5 or more years is kind of where you're going to get the sweet spot, where anything you might lose as the markets fluctuate, you're going to gain back with a little bit more.
So honestly, like I mentioned, the Franc app being goal-based. So if your goal is to achieve a certain amount of money within 2 years, I'll definitely lean towards more of a money market than the equity fund, because the risk is high. And although it might pay off, the money market is a lot safer, and the returns are more stable.
Cool. So our second last type of investment is an exchange-traded fund, or an ETF. Keval, do you want to tell us about that?
Yeah, so I prefer ETF, exchange traded fund. Is a bit of a mouthful, but it's similar to what you just mentioned about a unit trust. The only difference is that it's listed on a stock exchange.
Okay.
So an example of this is the Satrix Top 40 ETF. And this is a great example because this is what we offer on the Franc app as our equity fund. And this basically tracks the JSE Top 40 index. And to give you an idea, over the past year, it has gained probably 12%. So around the 12% figure. So
That's
it's been doing quite decent. So it's obviously better longer term investment over 3 years. Yeah, it's been 12% this year, but it could not be 12% over the next year. But over the past 3 years, the performance has even been better than that, more than double. So it's a really good option for those longer term investors.
Awesome. So now, if I were an investor choosing between the unit trust and an ETF, because they sound, as you mentioned, very similar, I know that the returns are pretty similar as well. What is the difference, or what is the difference to me as an investor?
So the difference really is accessibility. So you have to have like a stockbroking account or a platform like Franc to access it. So it really helps having the Franc app because it gives you a great opportunity to invest in like ETF, like the Satrix Top 40.
Awesome. Which brings us to our next type of investment, which is actually not a type of investment, it's more of an account. And that's a stockbroking account, which you just mentioned. And then essentially that is an account on a stock exchange like the JSE, which lets you buy and sell shares, or in this case, ETFs, right? And it's a great thing to have if you're keen to trade shares. There are platforms that allow you to do that. So Easy Equities is an example of it. And they really do make it really easy, right? Sometimes too easy, which is the only risk there, right? So if you know what you're doing, you're a seasoned investor and you have good resilience when it comes to the markets kind of fluctuating, great. If you're not and you're nervous and the markets go down and you sell your shares, it's obviously a huge risk to buy high and sell low, which is not ideal as an investor.
Also, you might feel overwhelmed because there's so many different options you can choose from.
Yeah. So in that case, something like the unit trust or an ETF, it's an already diversified, relatively high risk but high return investment that kind of does a lot of the legwork for you in terms of the research. Okay, cool. If you've made it this far in the podcast or the video, well done, and thank you for listening to us. We'd really love to know that you have made it this far, and pop a few orange hearts in the comments below, please, so that we can see that you are listening to us. And let us know if you have any questions for any future discussions, where we talk, as mentioned, about investing and managing your money a lot. And we're always keen to understand what questions you want to have answered.
Exactly. If you want us to talk about certain topics, mention in the comments below and we'll look out for it. And who knows, we might be talking about your topic next.
Totally. So the last thing we want to talk about is all the investment types we didn't talk about, right? So there's definitely not a comprehensive, exhaustive list of types of investments. There are very many more. And this is what Nick mentions in his blog post, which we're obviously going to link to, so you can read the full blog post as well if you would like. So some of the investment types that he didn't mention, or mentioned that he didn't mention, were RAs, so retirement annuities, property, investment-linked life insurance policies. Why did he mention that he didn't mention them, Keval?
Well, there are many reasons. For example, the property market in South Africa has not been doing the greatest over the past few years. So I think he just highlighted accounts and types of investments that are easily accessible to people, and some that we offer on the Franc platform that makes it useful for the users listening and watching.
Completely. And he specifically mentions the best types of investments where you have control over your own money, right? So something like retirement annuity, great product, but there are very many restrictions, very many T's and C's when you sign up to it, which obviously restricts your control over it. Whereas something like the ETFs, which is also a long-term investment, you have a little bit more control around that.
Example, like again with the property market, if you're applying for a bond, that takes a couple of months to just get approved in the first place. So just
Completely.
Easier to open up a Franc account and start investing now.
Completely. Thank you so much for joining us, and thank you for being in the studio
with me.
Thank you for having me.
Yeah, it's great.
It was great chatting. If you really liked this video or podcast, please subscribe for more. As mentioned, we come out with another Frankly Speaking every 2 weeks. If you liked this specific discussion or conversation, please like and comment. We'd love to hear your feedback. And again, we'd love to hear your questions. And until next time, cheers.
Thank you. Bye.